Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Luis, and we're excited to have you join us today. We're starting off the week with a look at the current state of the market, and it's been a bit of a roller coaster ride lately. The Nifty and Sensex both drifted lower over the past week, losing over 1% due to lingering uncertainty surrounding global tariffs and a disappointing start to the earnings season. Now let's break down some of the key factors that are likely to impact the market this week. First up, we have the Q1 earnings season in full swing, with big names like HCL Tech, Tech Mahindra, Axis Bank, ICICI Bank, Wipro, and HDFC Bank all set to report their results. This will give us a better idea of how these companies are performing and what we can expect from them in the coming quarters. We'll also be keeping an eye on domestic data, including the WPI and CPI inflation numbers, which are scheduled to be released on July 14th. These numbers will give us a sense of where the economy is headed and how it might impact the market. On the global front, there's still uncertainty surrounding potential tariff moves by the Trump administration, but there's also optimism about an early trade deal between the US and India. We'll be watching these developments closely to see how they might affect the market. In addition, we have a busy IPO calendar ahead of us, with several prominent listings scheduled to take place. And of course, we'll be keeping an eye on foreign institutional investor flows, which can have a significant impact on the market. From a technical perspective, the Nifty is looking a bit weak, having slipped below its previous swing low on the hourly chart. However, it's also approaching the support of the 200 hourly moving average, so we'll be watching to see how it reacts to this level. Finally, the rupee has been trading weak due to capital market weakness and higher gold and silver prices, among other factors. We'll be keeping an eye on how the rupee performs in the coming days and what impact it might have on the market. That's all for now. We've got a lot to cover this week, and we'll be bringing you updates and analysis throughout the show. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest news that's making waves in the world of finance and trade. Today, we're focusing on the recent tariff threats made by President Donald Trump against the European Union and Mexico. This is a story that's been unfolding over the past few days, and it's got many investors and traders on edge. Now let's break down what's happening here. President Trump has announced a 30% tariff rate for the EU and Mexico, effective August 1st. This move is seen as a significant escalation in the ongoing trade tensions between the US and its trading partners. The question on everyone's mind is, how will this affect the markets? We've seen some initial reactions from traders, with stocks falling from all-time highs and the dollar rallying for its best week since February. But despite these moves, many investors seem to be taking a wait-and-see approach, hoping that Trump will back down or negotiate further. Brian Jacobson, chief economist at Annex Wealth Management, warns that investors shouldn't bank on Trump only bluffing with this 30% tariff threat. He notes that this level of tariffs is punitive and could hurt the EU more than the US, which means the clock is ticking for a resolution. It's worth noting that the EU had been trying to conclude a tentative deal with the US to stave off higher tariffs, but Trump's letter seems to have punctured that optimism. The Mexican peso, on the other hand, has been performing well, setting a one-year high against the dollar just last week. As we analyze this situation, it's clear that financial markets are struggling to price in the on-again, off-again tariff campaign instigated by Trump. While some investors are cautious, others seem to be taking a more optimistic view, hoping that the president will ultimately back down or find a way to negotiate a better deal. As J.P. Morgan, Chase and Company CEO Jamie Dimon warns, markets may be complacent about tariffs, but it's essential to stay vigilant and monitor the situation closely. The impact of these tariffs on global risk appetite will be crucial in determining the direction of the markets in the coming days and weeks. That's all for now. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at some interesting developments in the market. As we've been discussing, the Indian stock market has been experiencing some fluctuations lately, and it's essential to stay informed about the latest trends and analysis. Recently, there have been some concerns raised about the derivatives market, particularly with regards to the Bombay Stock Exchange. The BSE shares took a hit, ending the week down 10% amid negative news flow around derivatives. This has led to some uncertainty among investors, and it's crucial to approach this situation with caution. On the other hand, some experts are suggesting that certain stocks, such as Bharti Hexacom and Aster DM Healthcare, may be worth considering for investment. These stocks have been showing promising signs of growth, with Bharti Hexacom trading within an upward-sloping widening wedge pattern since May, and Aster DM Healthcare forming an inside bar doji candle on Friday, suggesting a potential attempt to reverse course. However, it's essential to remember that every investment comes with its own set of risks, and it's crucial to do your own research and consult with financial experts before making any decision. The Indian stock market can be volatile, and it's vital to stay up to date with the latest news and analysis to make informed investment choices. In the world of its stocks, some experts are predicting a technical rebound, while others are advising caution due to the current market condition. The FMCG sector is also experiencing some fluctuations, with some heavyweights witnessing profit booking and remaining under pressure. As we conclude today's show, it's essential to remember that investing in the stock market always involves risk. It's crucial to be aware of the potential pitfalls and to approach every investment with a clear understanding of the risks involved. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.